All right, guys, we are recording and live on Facebook, so it's all you.
Alrighty. All right, Phil, if you want to unmute yourself, I think we're ready to go. All right, everybody. Well, thank you so much for joining. Happy Tuesday, May the 4th. If you're into Star Wars and all that good stuff, I appreciate you all hopping on here. I appreciate those tuning in live on Facebook as well. We still have a few people hopping on here. So we'll get started though. My name is Sean Phelan. I am the former president of ARIA Northern New Jersey for 2020. And today I'll be hosting this webinar here with special guest Phil Rizzo. And we'll be diving into him and what he'll be talking about here in just a minute or so. We want to take this time and recognize our sponsors for the year. We want to recognize U.S. Bank, which I'm a proud member of, and appreciate them sponsoring our chapter, HSBC as well. And then we also want to thank Citibank, who's been a faithful supporter of our chapter for several years now. We have here Larissa Longchamp. She is representing them here this afternoon. And Larissa, if you want to say a few words.
Yeah, thank you. And thank you, everyone. So good afternoon. And I really just want to say that, Citi is very happy to sponsor ARIA chapter. As you said, we've had a great partnership for the last several years. And we're glad to be a part of it. So thanks for bringing this event. And what I do at Citi is I work with our low to moderate income and diverse consumer populations. I work like ARIA, and glad to sponsor and glad to be here. And thank you for having us.
Thanks, Larissa. Appreciate it. Appreciate you and your team and always being willing to sponsor and support our cause here. But we'll dive right into it here because we have a lot of ground to cover. I'm sure you all will have some questions. Feel free to type those into the chat. We'll be monitoring that. And then towards the end of the session, after we get through the interview with Phil, we'll do a Q&A time for any questions that you all have. So feel free to drop that in the chat. And then at the end of the session, we'll be addressing those for about 10 minutes or so at the end. So just an introduction to Phil. Phil Rizzo, he's been a real estate developer and investor for about 20 years now. He's a third generation in the real estate business. Them and their family have invested and developed everything from residential to some commercial, storefront, etc., as well as several apartment complexes. And then more recently, in the past few years, he has started 2 different churches in Hudson County, New Jersey, and is very recently a candidate for New Jersey governor. So appreciate you being with us this afternoon, Phil.
Thank you so much for having me. I'm looking forward to a great discussion, talk about the state of the state from the real estate side of things and the direction we hope we'll all be going here real soon.
Appreciate it. So one of the things we want to talk about is, growing up in a real estate family, right? I did mention that you were and are a third generation real estate developer and investor. What was that like? Did you always want to get into the business that dad and granddad were in? Talk to us about that.
Well, growing up third generation, obviously we've been around real estate, growing up on construction sites. And, when you get a little older, you start spending some time in the office. And when I was coming through high school, I knew I wanted to be in and around real estate. I wasn't exactly sure where I wanted to land within the industry. One of the things that I always enjoyed was the design side of things from construction. I had considered being an architect. So through high school, I was taking some drawing classes and just the creative side of things. And when I went to college, I decided that I was going to just get more well-rounded, not be so specific in architecture. And so when I went to Villanova University, just outside of Philadelphia, I went for business management. And so I figured I'd get the 10,000-foot view from the management position, and then I knew I could specialize after that. When I graduated, I started working for my grandfather, who at the time had a decent-sized shopping plaza that he was using me to help find tenants to fill some of the spaces in that complex. And then he ventured out into Pennsylvania, and my job was more with the work boots, walking lots out in the Poconos and pricing them for him. So I always knew I would be around real estate. How I got to where I was a little bit more of a journey, but I knew I would always be involved on some level within the large umbrella of real estate. But it's been a journey from high school all the way to today.
No, that's great. And working for family is always interesting experience. That's for sure. What were some of the challenges after you kind of started branching away from your grandfather's work and started getting into your own development? You started developing single family homes. Talk about the challenges.
Sure. Well, being around real estate is not being in real estate. And so you learn a lot of things on the job. And so we decided that we were going to begin developing ourselves. And so we bought just a couple lots out in the Poconos. We didn't buy them from my grandfather. He owned a bunch of lots, but we started getting our feet wet on the construction site. And back in the Poconos in the early 2000s, I would say that the challenges in development have come more recently. I would say the early years of developing were actually easier. Things are only becoming more and more difficult from the way the codes are written for construction. In the area of finance, it's, paperwork is getting thicker and thicker every time you need to get your hands on some investment money. And so the challenges really in the early years was the learning curve. But once you get your feet wet and once you start moving forward, I actually found that those early years were some of the simpler ones, and things are becoming increasingly more difficult with regulation and red tape.
Yeah, and we're dealing with that somewhat now, so I can wholeheartedly appreciate that statement with all my heart and soul. But you had a couple, I'm sure, amazing years from the early 2000s until 2007, 8, and 9, and when that began to hit. If I remember correctly, you were doing a lot of development on the Jersey side at that point. You were building quite a bit of houses in New Jersey, Sussex, Morris County. And one of the things that we want to touch on today, really why we're having this webinar, is to talk to you about what this next market correction is going to be, because you went through one back then, which was obviously historical. That'll be forever printed in the history books in America. So talk to us about what you went through specifically as a real estate and developer, what you would have done differently, what you would have changed.
Sure. A lot of people, unfortunately, back in that real estate correction or fallout, maybe more appropriate. A lot of them didn't survive it from the business side of things. A lot of them had to start all over. When we were building, we realized, as I mentioned, our career in construction side of things personally started in the Poconos. And by that time, we were already into New Jersey. And as we started winding down in the Poconos, transitioning into New Jersey full time, we noticed a trend that started happening. A lot of our buyers out in the Poconos started getting 106% financing. And we started to get very nervous when we started to see banks throwing money at people at 106% so that they could pay for all of their closing costs. They could buy curtains and furniture. They could pay for the moving truck. We were getting very nervous. And so what we did deliberately is we started slowing down. We saw the correction coming. We did deliberately pump the brakes ourselves. We stopped acquiring inventory as fast as we were. And when you start, putting bricks and sticks together, and we were building on spec at the time, we wanted to make sure that we didn't get caught with, 6 or 7 standing houses. So what we did is we deliberately pumped the brakes, and it was the financing that was really the indicator that things were going to get scary. And one of the other indicators was many of our trades, many of our subcontractors, our plumber, our electrician, our HVAC contractor, a lot of the people that were working as subcontractors on our homes, we were building out that track out in the Poconos. A lot of them, because they were riding the financial wave with the developers, everybody was getting financially compensated. We started to see many of our subcontractors start to branch off and start building on spec their own. And we personally, I learned that the hard way with the tech bubble that burst just as I was jumping into tech. The market corrected and the stock market corrected, and so I tried to play another man's game, and I learned the hard way. And then when we were in real estate and we were building, we started to see that people started to play the builder game, and that was another indicator. So as I look back to those years, it affected us in a way where we did give a couple properties away. We took our bruises with everybody else, but because we saw it coming, we lived to tell about it, and I'm so thankful for that. So what would I do differently? I mean, we really did get caught and took 2 pretty good bruises. Those are the only 2 things I would have done differently. Maybe we would have not even started those houses. I mean, everybody has hindsight 2020, but from what we know happened, I think we fared as well as we could. No major adjustments, but we did take bruises like everybody else.
Right now, and I think that's a lot of good insight, right? You're watching the end users, you're watching people who are a part of the real estate process, contractors, subcontractors, right? Now trying to take a bigger bite of the apple because there seems to be so much more meat on the bone, right? Not too different than what you see right now, right? The issue is we're at an inventory shortage, right? At the moment, with an inventory shortage like that, what do you see trends right now, right? If we're at a 4-to-1 inventory shortage right now, would you recommend people diving into that world, right? Would you recommend somebody trying to get in a little bit deeper and take more meat off the bone the way you saw those contractors trying to do it back in 2007, 8, 9?
I would say for the developers that are on the call, that might be an indicator that the correction is coming. But for the people that have the cash, listen, I'm a capitalist. If you have the cash and you want to sneak in a flip or 2 or 3, everybody's situation is different. I wouldn't necessarily discourage anybody from doing it. I would just say that there's some similar indicators happening. And so I would maybe tell some developers, maybe be careful, see some of the similar trends to the early 2000s. But if you're sitting on some cash, I wouldn't discourage people. The inventory shortage is there, and people are going to get paid. People are making money right now. I would be cautious as a developer. I may not go try and build out a subdivision of 30 houses right now, but spot lots, flipping 1 or 2 at a time for your cash position. I think that's a good idea. I never discourage people from making money or try to discourage them from getting involved in the process, even if that's not their day to day. But I always recommend caution.
So let's talk. You mentioned a couple opportunities in right now, right? The way the market is, because there's an inventory shortage. What do you think are some safer opportunities if you are trying to dive into the industry or you're mid-level, right? You've done a few houses, you're used to the process, you're trying to scale up, you're trying to take advantage of where the market is right now, getting to its peak. What would you say are some safe opportunities that you would be looking for?
Sure, that's a phenomenal question, and the way that you worded it is right on point. For people that are coming in or mid-level, they've got a couple under their belt. What is safe? That's the key. What is safe? For me, I would say what is safe is a flip. There's plenty of baby boomers that are stepping away from home ownership. The houses need work at various levels. Listen, there's gut rehabs out there that may not be for the first time efforts, but there's a lot of inventory out there that can take a good reworking, but not quite a gut rehab. I would say one at a time. One at a time. Get your feet wet. Don't go for a gut rehab. Go for something where you have to take out a wall or two, and then renovate kitchens, bathrooms, trim, paint, flooring. Beyond that, if you start getting into gut rehabs, knowing your numbers, because people are so busy right now, what you think it's going to cost you, the subcontractors are going to throw out different numbers at you because they could take or leave your job. They're trying to satisfy their builders that are, stacking blueprints on their desk, and you've got one house. Well, they're going to say, well, you know what? I'll do the job if I get X. That X number may hurt you. So be careful about going for a complete gut rehab. Facelift, yes, but I would think that that's very safe. There's a lot of good opportunities out there, and not every job has to be a home run. I learned that 4 singles equals a run. So if you can hit 4 singles, that's just like hitting 1 home run. But when you swing real hard, trying to hit that home run, there's a lot of strikeouts too. And I never want to see anybody get hurt, especially when they're jumping in and they're kind of new.
No, that's great advice. And one of the things that I think is interesting, particularly about you and your family business that you run here together, right? You and your family together, you have 2 apartment complexes with approximately, I believe, 400 units right now, plus some other commercial properties and whatnot. What would you say as we're watching the market crest up, and again, what goes up must come down eventually, right? We don't have a crystal ball to know if that's coming in a year, 2 years, if it's going to be pocket crashes, et cetera. But we're talking about New Jersey, right? Which is its own unique market and own unique set of challenges. You could have Warren and Sussex County, and then 50 miles east, you have Bergen County. It's like 2 different worlds, right? But you have holds and you do flips and redevelopments on a fairly regular basis. Talk to us about that, what you think is a healthy ratio, what you prefer, what you would be looking for in a market like this.
Sure. As you mentioned, the climate of New Jersey right now, I would from a landlord position, my father, he's in his 70s. I am involved a bit. I've had my own construction company for a while now, and so it's family owned. And one day, I'll take ownership. I don't have it now. One day I'll take the ownership, and so I'm involved a little bit. And New Jersey is a very unique situation right now because of what's coming out of Trenton. If there's any landlords that are on this call right now, that you are just thankful to get your rent check, because politically speaking, under the executive orders, people don't have to pay their rent right now, and landlords are prohibited from getting possession based on non-payment of rent alone. And so we're in a climate like we have never, ever seen before. And so how do we navigate this going forward? Honestly, right now, people are just hanging on. If you have to the previous point, for people that are coming into the construction side of things, that's great. There's plenty of people that are moving in from New York. There are people in New Jersey that may be upgrading homes. There's plenty of that to go around. But from the buy and hold standpoint, this is not something we've ever seen where a government official has inserted themselves into a private contract the way that they have. And so I think we have a giant question mark moving forward on multifamily. Obviously, with where I am at in my life, there's some changes that I'd like to see coming to New Jersey from that point of view. But from as far as like going to buy them, right now, I'm not exactly sure what people's books even look like. How do you sell something right now without cash flow? I don't know how people are calculating those numbers. And so right now, for me, the opportunities and moving forward through New Jersey right now, I see more on the construction side of things. Get it and get it out of your hands quickly. Buy and hold right now. I'd be afraid to give that sort of advice right now, just because it's so weird what's going on politically.
Would you say it's a safe strategy, being as prices are at an all-time high, inventory, there's an extreme demand to generate your capital, generate that cash that you need for future acquisitions, and make as much as you can, trading the properties in and out, hold your cash, get ready to go. Obviously, watch on the tax side of things, but try to build up that cash and that capital raising for some acquisitions once this fallout does happen?
Absolutely. That is to the point, and that was a good summarization of what I said. I'd be nervous to buy and hold right now. And again, I don't know the level of every person that's going to watch this. If you're sitting on a few $1 million in cash, by all means, have at it. I don't know if that's going to be for everybody right now to buy a 2-family, 4-family, a small apartment building, 10, 12 units. But what I would say is watch your debt, get your cash in hand through flips. And listen, nobody, I mean, to time something absolutely perfect, there's a little luck in that as well. Probably everything I've ever bought, I've overpaid to buy at the absolute bottom. There's just some luck with that. And so I would say that I've overpaid for everything I've ever bought, and I've never sold at the absolute pinnacle. So there's no crystal ball, but generally speaking, increase your cash, get yourself in a safe place with debt, and there'll be plenty of time to make money on the uptick once we know what's happening on the backside of the coronavirus crazy that's going on.
Got it. No, some good points there, and definitely some great tips for investors. Talked a little bit about partnerships. That is an interesting topic when it comes to real estate investing. I mean, you've got all kinds of gurus out there, self-proclaimed, some legit, some not, on YouTube and social media, telling people how to house hack, what they should be buying, how to do syndicates for 30 people investing in, a 50-unit apartment building. Talk to us about what kind of partnerships you've been comfortable with over the years, maybe some partnerships that you would not want to try again. Give us the good, the bad, and the ugly.
Sure. I mean, on some level, I would say there's two different kind of partnerships. One is because you need to, right? You just don't have the capital to do it yourself. You're the partner that can bring the sweat equity. You're the partner that can bring the oversight. You're the one that can manage a project, but somebody else has to be the money behind it. That happens every day. Or maybe you have cash and you don't have time to oversee a project, and you need to find the person who's going to bring, the labor side of things, be your foot soldier. Those kinds of things we have been involved in. Sometimes they're interfamily, and I've been the foot soldier, and it works great. It keeps your capital safe for your family, and those that can afford to put more cash out of pocket. That is something I'm very comfortable with. When you start getting into what we'll call a partnership, where you're starting to deal with people you don't know, you're unsure about how the deal, always have an exit strategy. You have to think, worst case scenario, how do I get hurt and how do I get out of this? And again, that is kind of the theme that I've said a few times here. If you're going to get involved in a partnership, do it on a house or two. I would be very careful about getting involved in a partnership where, this pie in the sky, we're going to go build out some 30 house subdivision right now, or hey, we're going to go purchase this 90 unit apartment building. I would be careful about some of those things right now, particularly for those that have not done it before. But again, keep it manageable, bite-size, incremental, moves, and always have an exit strategy. And always think worst case scenario. If this whole thing burns to the ground, what happens to me? And that might be your time, that might be your money, depending on which side of the partnership you're on. But again, less is more when you're not making unilateral decisions for yourself, where there's everybody gets a vote. Just be careful.
Yeah, no, I think that's a great point you made, right, on the unilateral decisions, right? And that's, I think, especially in this type of business, what causes a lot of the breakups, maybe painful breakups between partnerships, and that you've seen from time to time here. Speaking of real estate and trading and buying and selling, you've had great success as a developer. Your family's grown their business. You personally have, and now you're transitioning from the developing world, kind of putting that on a pause for a little bit and switching over to being a candidate for governor. And I follow social media. I know you've got a couple folks shooting at you for some real estate trading that they people in the real estate world may or may not understand a little bit. I think you're sitting inside one of those real estate pieces at the moment. But talk to us about why in the world you as a real estate developer would start running for governor. A lot of people said you're crazy. I think I did too. So talk to us about that transition, why you're doing this, and all of that.
And as I said, hindsight's always 2020. So I think I remember when you said I was crazy. You were right. And so it does take a real determination to get involved in the political world. I have a wife and 4 children, and we've talked about this for some time. And we know the political climate, it's designed that way on purpose to make people afraid to get involved. And I offered some cautionary tales, not trying to scare anybody away from getting involved in real estate. But the political climate is specifically designed, I believe, to keep people out, because many people who could bring a really good campaign, that they could be a really great candidate, they'd be a really good elected official. Many times they look at the situation of the political climate and they go, I don't need this. Why do I need that headache in my life? And so we processed that for quite some time. And so as a 3rd generation real estate developer and having my own construction company, doing residential, rehabs and flips and some new construction. And as you mentioned in the intro, when introducing me to the audience, you did mention that for the last 10 years, I've been pastoring in politically deep blue Hudson County, conservative churches, 2 churches, one in Hoboken, one in North Bergen, conservative churches in deep blue Hudson County. Because of all of that life equity, I have a pretty good cross section of New Jersey families. And the reason I was willing to pivot, as I mentioned, when we talked about some of the buy and holds, if you're a landlord right now, you know that the government has decided your tenants don't have to pay you, and you have no recourse to get your property back, your unit back, and rent it to somebody else. And so it does affect, politics does affect the business world. And by God's grace, we are paying our bills. We've not laid anybody off. Our tenants, for the most part, are paying. Obviously, some can't because they lost their jobs. Others don't, even though they can, and they're taking advantage. But like I said, by God's grace, we're okay as we move forward into month almost 15 here with this going on. But also from the ministry side of things, the entire faith community was deemed non-essential and closed. And so politics, government does affect every area of our lives, from business and family, kids in school, and also the faith community. It touches everything because they're developing policy. And what I realized is if we survive 4 years under the Murphy administration, it's going to be a miracle. I don't think we survive another 4. There's 1/3 of all New Jersey businesses are closed, permanently closed in just 13 and a half months, gone. Why? Because of government decisions. And so it affects every area of our life. And so we made the decision to get involved, not because I'm bored. I think hopefully people on this call understanding with my real estate, my family, and the ministry, I was not bored. I'm not necessarily doing this for me. Yes, I'm the candidate, but we're doing this for New Jersey, for New Jersey families, businesses, ministries, you name it, across the board. I don't believe New Jersey's headed in a good direction. And I don't think we survive another 4 years under the current administration.
Got it. No, I appreciate the explanation. You coming from the real estate development side, when I met you, you lived in the town I live in now, Sparta, right? Sussex. You're developing in New Jersey and Pennsylvania. Now you live and develop in Morris, but then you've also worked in Hudson, right? So you've kind of gone across the span of North Jersey and seen really a lot of different kind of culture, a lot of different type of real estate markets in that. What would you say, being as you're running for governor, but you have one hand always on the real estate pulse, what are some things that you see coming down the pike that may change in the real estate world because of what may be coming down as far as legislation, and what would you be looking to change? What would be your goal to adjust?
Absolutely. And I believe that this current political climate is going to impact real estate. We know that the real estate market, this shortage is very high. That is because New Yorkers are coming into New Jersey. Why? Well, because of bad politics. People are jumping out of New York because of bad politics. And so New Jersey, I believe, has the largest exit rate right now in the country. So we're not feeling it. Why are we not feeling it? Why is everybody bragging that they sold their house in 4 days higher than ask? Well, because there's people coming out of New York buying up those properties. My fear is we are being misled that that's somehow a real estate trend. I don't believe that that's a real estate trend. I believe the real estate transfers and the market right now is being driven by politics and policy. People coming out of New York is based on political damage that's happening on the other side of the Hudson River. If Phil Murphy gets reelected and we get Cuomo 2.0 for another 4 years here in New Jersey, the New Yorkers are going to spare themselves the effort of moving one state west, and they're going straight south. Now, how do we get out of New Jersey when there's nobody around to buy our homes? So right now, Phil Murphy is, one rung on the ladder lower than Cuomo. And that's just because he's a follower, but not because his ideas are any less dangerous. He's just following the leader. And if we get Murphy again, the New Yorkers are going to know New Jersey's always just one step behind, and they're not going to come bail us out of our real estate. They're going straight to Tennessee and Florida and Texas themselves, and then we're trapped here. So I believe the political climate right now is very volatile on what happens in Trenton this election cycle.
Yeah, no, that's really interesting. I actually, my mortgage business has been altered. I just did my now first and second quarter valuations, and I'm now doing almost 45% of my business from Georgia and south, as crazy as that seems, because a lot of the clients I have are moving to Tennessee is now growing as well, Texas. And so we are seeing that trend. And I would say of the clients I see, I do see a lot hopping across the river, right? Or I see just people wanting to stay in New Jersey for economic reasons. Their job is here, right? Their kids go to a certain school, right? They're 8, 9, 10. They don't want to uproot them, and they're going from one side of New Jersey to the other, right? But there definitely is a trend exiting for sure. One of the questions that we have here, and I think this is a good time to ask it. She's asked, can you kindly ask, as a candidate, what changes you are able to do, as we hear from the current administration, taking away the 1031 exchange and increasing capital gain taxes, et cetera?
Yeah, there's a lot of things happening right now on the state level and also on the federal level. These are things that from our family business right now, based on the last election cycle in DC, the idea of this 1031 exchange also coming out of the Biden administration is this idea that they're going to eliminate this stepped up basis on death. That would decimate people financially, that you don't get a stepped up basis at death. And so we just started those conversations after everybody reeling from what happened. All of the financial planning, all of that has started on our end. But legislatively, I'll be honest with you, I don't want to give anybody any policy answers. But we obviously, as owners and real estate people, the 1031 exchange is what allows you to pyramid up and to grow your net worth. And so obviously the 1031 exchange is something that has been, it lets you defer taxes. It's really a tax deferral situation. Having an exit strategy after that, you need to think about that. And so our family has decided that our exit strategy is death. That's why I mentioned the stepped up basis on death, how brutal that would be, because that is a path that some people choose. You're not going to retire. You're going to run your business until you die. And that deferred 1031 tax bite will be handled within the estate. So I don't want to talk policy too much. When it comes to estate planning, that's something that the CPAs are really going to give the best answers on. But as a political candidate, somebody who is looking to get into office, the 1031 exchange to defer your taxes is something that is very beneficial for growing net worth.
Got it. No, I appreciate the answer here. Well, one last question we'll touch on before anyone else has any particular questions for you. Looking, and we covered a lot about what may be happening on the national scale, what is happening on New Jersey. Do you have any predictions, and do you have any particular opportunities that you and the family real estate business are in particular looking for as you watch what's happening in the state and really in the Northeast, what's happening between here and New York? Any opportunities that you guys are seeing on the rise and are keeping an eye out for yourself?
Yeah, one of the things that we're watching, and again, like I said, there's some luck in buying at the bottom, right? Nobody has a crystal ball. But one of the things that I think is very interesting to look at are the urban areas. Obviously, people are getting out of the urban areas right now, but that's just a trend. People will eventually come back to the urban areas. And so what I am looking at, and I'm not looking at it very deeply right now, but it's conversations that we have within our family business. I'm telling other people to look at it because I'm campaigning full time, but looking at the urban areas, the cities, even Manhattan, obviously you got to have a certain level of financial wherewithal to get into Manhattan, but even people exiting the cities, that's not going to last forever. And so if people are looking, I'd look east. The trend, obviously, people are going to eventually go back. I don't think the cities in America are dead. What would happen? We're going to just start tearing down these buildings. I don't see that. The government will get involved to incentivize people to go back into the cities, whether it's for work, which is less likely, but for residential. And so I would look with this current climate, I'd look at East. I'd look at the cities, Hudson County, Manhattan, even into New York, into the boroughs.
Got it. No, some great thoughts. We have another question here. Do you see any particular countries investing in large scale real estate? Even over the past 3 to 5 years, have you seen any particular trends that you've been aware of that you've taken note of, and any reason why?
Obviously, we know that China has a lot of real estate investment here. On some level, there's a lot of countries that have their hands in the real estate market. In America, America has been a great place. It's a great place to do business. It's a great place to live. Anybody who says, well, make America great again, when was America ever great? America's always been great. The immigration rate into America has proven that it's number one year after year after year. And so there are a lot of different countries that do have investment here, whether it's in population coming here or putting their dollars here, their investment dollars here. Again, I know China is one, but everybody has a touch in American real estate. It's just been a beacon of capitalism. And now there's others that are coming up. There's others that are rising besides America, but America has always been a very safe place to put their money. I'm wondering if, as we watch, if the question couldn't be reversed, right? Where are people spending their money from other countries? Instead of coming to America, where are they starting to invest? That, I think, is a very interesting question. Where are people going instead of America? I think that is a great question that people should be looking at over the next few years as we move forward politically. We have a lot of instability in government right now, and I think people may send their money to other countries instead.
Got it. No, that's a really interesting thought, and appreciate the answer on that. And it's interesting. Sometimes, depending on who's on the call, you may have a real estate practitioner who is, your classic real estate agent doing residential single-family homes. That's their bread and butter, and they're doing very, very well right now. But we forget that that's such a small section of the marketplace right here in our wonderful state of New Jersey, and in a certain area of that state. And if you sit back and look at a 10,000-foot view, you may see a lot more money and a lot bigger trends in other places that we just don't have the time or really the know-how to even look at the moment. And then, you were doing a lot for a little while in Morris County in those more suburban areas, right? I know Madison and the surrounding areas of Morristown were kind of a favorite playground for the past couple of years for you guys. Just touch on a little bit of that type of marketplace. You specifically went after more of a higher end, around $1 million and upwards, redeveloping and even knocking down and building new. Talk about that trend that you saw coming out of those cities, coming out of those urban areas, and the type of buyers that you saw coming out to the Morristowns, the Madisons, the Chathams.
Yeah, again, as I said, as a candidate, what got me into politics was, as I said, my real estate business and our ministry in Hudson County gave me a very good cross-section of the New Jersey population. And I saw people leaving our Hoboken ministry or our North Bergen ministry, heading west, but keeping their job in Jersey City, downtown, or in Newark, downtown, or in Manhattan. So when we made a real estate pivot, we went to the areas where we knew those people were going. Chatham, Madison, Morristown, things that were on that Midtown direct train line, because they're moving out, they're, picket fence and a dog and 2.5 kids, but the job is east. So that's not, that's not rocket science. That's the way it's always been. But we saw that trend really ramping up, again, because of our real estate background, but also my touch into Hudson County. We saw how quickly that was happening. We figured we could capitalize on it, on that train line, to get people back to work. And again, now that's changing because people don't have to go to those workplaces anymore. And I think a lot of that real estate that's been office space, I think a lot of that's going to get converted to residential. I mean, they're not going to knock down millions of square feet of office space simply because everybody could do this, right? This is people's new line of work, is telecommunicating. They're not going to knock down millions of square feet of real estate. They'll convert it to residential, I believe.
Right. Right. Well, if anyone has any other questions here, we're going to wrap it up. Speak, type, Q&A, or forever hold your peace here for Phil. But I appreciate all the answers, appreciate your time, and taking some time to give us a little bit of insight on what you're seeing legislatively, what you're seeing politically, and then obviously and how it affects really everything that all of us do in such a major way. One of the questions that actually just popped up: is there anything we can do to assist you if they want to get involved with you or what you're doing? Anything that they can do to help you?
Sure. I'm assuming that help is a political question. Our campaign website is jerseyrizzo.com, jerseyrizzo.com. And so really campaigning is money. It's fundraising. Relentlessly all day, every day. I've loved this call. This has been the best 49 minutes of my day so far, and I guarantee you it will be the best 49 minutes of my day, because I am not fundraising. I am not on the phones calling people. That is the grueling part of campaigning, is fundraising. But since the question came up, what can we do to help? Go on our website, jerseyrizzo.com, and donate. We need to get our message out. And if you feel that I've given a plan, I have a good resume to lead our state in a better direction, a different direction that it's currently going in, it costs money to get that message out. Go to jerseyrizzo.com and give what you can. Great.
And we'll type his website and contact here in the chat for you all. One last question we have here says, do you see any forecasts in commercial real estate? You were touching about all the vacant office buildings that are leaving. Any particular? I know you touched a little bit that you think they're going to be converted. Any particular forecast other than that?
I mean, that would be just a bit, right? That would be a bit of that office space that would be converted into residential. Outside of that, anything I project would be simply a guess. And I don't want to guess wrong. I want to let you know what I know and what I have a good grip of what I think. But to guess, I'd hate to say, other than obviously a good portion of it is going to be, converted. Our campaign office space right now, we're in an office park. I think it's 7 buildings, and we're renting cheap. Most of the space is vacant. It is built out. It's an office park. It is all being torn down and it's being converted into residential. And so I know that that's going to be the trend, because we're renting it for our campaign right now. It's month to month. We never know when that building's coming down. Obviously, hopefully not before November. But other than that, I would just be guessing, and I don't like to give business direction on guesses.
Appreciate it. I said that was the last question, but it's not. I'll ask one last question here because it's an important one and it's a good one. Do you think interest rates will rise in the near future? Any thoughts on that? I might see that question 3 times a day on social media. Somebody asking somebody. What are your thoughts there, Phil?
Well, I guess I'll answer that question with a question. Can they go any lower? I mean, I think interest rates are only going to be going up. Are we going to see hyperinflation? Oh, goodness, I hope not. But I think they are going to go up. I think they have to trend down. Where are we going? So yeah, I believe interest rates will rise. Obviously, hyperinflation, that would be a mess. But again, when it comes to finance, there's people out there that are probably smarter than me on those sorts of projections. I don't want to guess, but simple answer is yeah. I mean, they're not going down.
Yeah, I mean, last year, I guess it was right around this time, the Fed funds rate, which is the rate that banks borrow money from the federal government, went down to 0%. So there was zero yield in that avenue, which again, how much longer can that be? We stepped into quantitative easing, which is, to put it very simply, the government is buying the mortgages on the secondary market because there is not an appetite enough for them because of all the new policies that came out regarding economics. So it's interesting. You see kind of a vicious cycle where policies come out, it creates a vacuum, but also then the government does have to step in to fix the vacuum that they just created with the policies. And we've seen that trend now over the past 18 months. And it is a very similar trend that we saw post-crash just about 10 to 12 years ago. So hopefully it'll be a little bit different this time. But for those investors out there, we hope that this was a help to you. Hopefully that you will take some of the advice and the thoughts and use it to your advantage and to take advantage of some amazing opportunities that I'm sure will be coming down the pike here in the near future. But again, Phil, thank you so much for your time. If this was enjoyable to you all, please visit us on the web, on our Facebook page, on our Instagram. Take a look at our website, ARIA Northern New Jersey. Right there, you can just Google it and our website will pop right up. We have upcoming events. May actually is what we call our ARIA Community Month. We're going to be working with York Street Project to give back and to donate our time and actually our money to them. And we'll give you more updates on that. But thank you again so much for attending. And we'll let you get all back to your busy days, hopefully, and have a great rest of the week.
Thanks for having me, Sean.